Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So you can see here that in general everything is going with analysis that we have prepared in the weekly report. We said that currently market is overextended in all time frames and deeper retracement as technically as the fundamentally looks absolutely reasonable. It's just because even on the fundamental background you could see that with the current situation and the big money flow in the United States, the inflationary pressure might ease a bit in the nearest time. So at the same time, the moment hasn't come yet to show the problems which economy could have in the nearest time. And recent data that we have, statistics on the payrolls, on the production, consumption in general looks positive. And with some easing in the geopolitical tensions, at least the no new big events have happened recently, it's reasonable to see that the gold has turned to downside retracement. Is some part of the emotional action here actually takes place as well. And in these circumstances, we consider few patterns that might be interesting for trading, depending on your personality, your view on the market. So first of all, the deep retracement, as we said, with the big engulfing pattern stands underway, and actually it's coming to the minimum target. Could be achieved very soon. Market right now has broken through the confidence support and stands significantly oversold on a daily chart. This is in general a common thing when market comes from the weekly overbought to the daily oversold. This is normal. And in general, as you can see, the market is coming to the major support area. This is major 19.2, 30% support. This is major 30% level, right from these lows to this top. And it's actually one of the most important levels. Also it agrees with this previous top, as you can see. Also 1920 approximately. So that's why we intend to consider this level as a potential area where market could start bounce up. And in general, as we discussed previously, we also not withdrawing the kind of the bread and butter type of action, because here we have, so if you plot the moving average, you will see that market is showing the third close below the 3x3. We have the thrust up, 1, 2, this is third close below 3x3. Yes, thrusting action is very strong. It's maybe not very comfortable to consider taking the long position, but current fact is accompanied with the oversold and coming to the major support. Maybe spread and butter gets the chance to work properly and show the pullback. At least that's the pattern that we also have on the table, and I share it with you. Maybe it will be interesting for you if you would like to trade it. So that's what we have on the daily. So potentially 1920 area, it's interesting where market could start bounce. On the 4-hour time frame chart, we have the ABCD pattern based on the engulfing. You can see and take a look that OP target also stands on 1920. So it actually could be a bit different if you use not these A points but the absolute top. In this case it will be slightly lower, 1910. Let's call it as 1910. 1920 is an area where market will complete the OP, and it additionally will be the agreement with the major support. So all support background is ready for bread and butter bounce. So we have rather solid support area, including the major daily level, agreement with the target on the 4 time frame chart, and accompanied with the oversold. That should be enough to support market for a short-term bounce. Besides, if you will take a look at the other markets, for instance, on the 10-year yield, you could see that then in general downside action on the gold is justified by the rally on interest rates. Recent couple of sessions you can see big jump, and market actually completed 618 target of our butterfly that we discussed, but also what's interesting is that this level, if we'll take a look at the weekly chart, this is important 618 resistance from the whole downward action. So market completed bearish reversal pattern right at the 618 resistance, where a theoretical bounce also could happen. And also market is overextended on the daily chart. So this background, and you can see when interest rates are starting dropping, is a great supportive factor for reaction on the gold as well. So while the interest rate starts to react down, so response to the resistance level and reversal pattern, gold could start response up from the same support area. So this is very good agreement between cross-market analysis, which gives us more confidence that indeed the pullback could happen. And later we will see what will happen, because in general this is considered rather fast acceleration. After the bounce will happen, I'm not excluding the chance that we could get even deeper retracement, maybe to the XOP on some other levels. This is a different story. But currently, in tomorrow sessions, on the background of the Fed statement, we suggest that we need to keep an eye on the 1910, 1920 area, where upside bounce could start. So this is the scenario that we intend to keep an eye on in a couple of days.